Investors keeping a close eye on those trade tensions between Washington and China this morning as the U.S. plans to impose tariffs on $34 billion in Chinese goods beginning next week. The volatility returned yesterday for sure, despite President Trump suggesting he would scrap potential plans for new restrictions on Chinese investments in U.S. technology.
We have the great scientists, we have the great brains, and we have to protect that. And we're going to protect it. And that's what we were doing. And that can be done through CFIUS. We have a lot of things we can do it through. And we're working that out.
Joining us right now is the Chief Investment Strategist at CFRA Research, Sam Stovall. Sam, good to see you.
Happy to be here.
Has anything changed in terms of the backdrop for this economy with all of this noise around trade, immigration, et cetera?
Well, I say the backdrop, yes. The numbers, no. It's just too early. Wall Street anticipates what they believe will be changes. I think that there was a fundamental shift in investor sentiment earlier this week. Primarily last week, we had investors who were willing to rotate rather than retreat. They were willing to rotate into the smaller cap issues who are protected from overseas exposure, who are going to benefit from lower tax rates, who are going to see much higher earnings growth this year and next year.
And now? Have they shifted that?
We're seeing that basically all categories had been going through a sell-off. That being Monday. Tuesday we got, I think, sort of a technical bounce back, but then we're being challenged once again today.
So, Sam, when you look at the market overall right now, we've had this pullback. I think you pointed out perfectly. We were rotating for the last year to 2 years. Any sell-off was money going from one sector into another sector. But I see this as an opportunity because as long as the underlying fundamentals are still strong, I think any pullback creates a buying opportunity. Do you see it the same way?
I think that we have to probably test the 2676 level on the S&P 500. Right now, if we stay above that level, it's just an undulation, backing and filling, if you will. If we break below that level, then I think investors are telling us that they're more concerned about things. My feeling is you're better off buying than you are bailing if we're not headed for recession. And the indicators that I look at, everybody looks at the yield curve. I also look to housing starts. Every recession since 1960 was preceded by a double-digit decline in housing starts, and we're looking at a double-digit gain in housing starts. So I don't see a recession on the horizon, and so as a result, yes, give me a nice sell-off, and I'll be very happy to buy in.
With this backdrop, you would rising rates, strong economy, you would think the big banks would do very well. Yet you look at the J.P. Morgan's, Bank of America's, Citi's, they've all sold off quite a bit recently. Like, any thoughts on that, or if they become attractive?
I don't know why people like to say that the banks do well in a rising interest rate environment. History says the opposite. History says that 60% of the time, you have a 60% correlation with a narrowing yield curve whenever the Fed funds rate is rising. Makes sense because what's happening is that the Fed is increasing interest rates, reducing the threat of inflation, and that's how longer bonds are priced based on that uncertainty of inflation. So if you have less uncertainty, then the yield curve should be coming in.
What do you think about Harley-Davidson? President Trump issuing these stark threats to the motorcycle maker Harley-Davidson, who announced plans to move operations overseas. Listen to this.
Davidson is using that as an excuse, and I don't like that because I've been very good to Harley-Davidson, and they used it as an excuse. And I think the people that ride Harleys are not happy with Harley-Davidson, and I wouldn't be either.
Your thoughts, Sam?
Well, I think the company still is going to be a profit maker. They earned $3.02 last year, expected to be $3.45 this year, $3.95 next year. So double-digit earnings growth. But the way you do that is by keeping your costs low and doing what is within your power to do so.
I agree that Harley-Davidson, there's a certain amount of pride that Harley owners have that their bikes are made in the USA, but it does appear problematic. What do you think, Dagan, for the President of the United States to be calling out specific companies?
If this was President Obama, which he never even went this far, President Obama would go after broad industry categories. He did go after Anthem for rising insurance costs. But if this was President Obama, I would be sitting here pulling my hair out, and I would say this: how dare the President of the United States go after a business when they are merely reacting? They're doing what is in the best interest of their employees, their shareholders, and the livelihood of the company, when they're slapped with some policy that is because of the United States. So it's because of the actions of this administration. And then you have the audacity to attack an individual business and essentially threaten the livelihood. He intimated in the comments yesterday on Twitter that the company is going to go out of business. And I might be reading into that, but I said this at the start before President Trump was ever inaugurated, when he was going after Boeing. Do you remember that?
Yeah, you said stop
and I've
calling
said
that
it
individual.
time
That's why I asked you, because I remember what you said.
And if it was anybody else, we would be raising the roof, shouting, and to say that and to argue that Harley's business is in bad condition and they'd be doing this anyway. It's not just Harley. It is all of the farmers in this country that could get hurt by retaliation from China. It is a nail maker in the Midwest. It is a maker of lockers.
Right.
These policies have implications for some businesses that are negative, and that's all that we're reporting. But for him to call out Harley, and by the way, Harley's still going to make bikes in the U.S. If somebody wants to buy a made-in-America Harley-Davidson.
No, it's not all the production.
Right. Yeah. It's just because they got $2,200 added to the price of a Harley-Davidson in Europe because of a 31% retaliatory tariff.
Yeah,
That's
having
what's
said
going
that,
on.
the U.S. was on the losing end of the deal with Europe anyway. I mean, we were facing a $150 billion deficit with Europe, so I don't know why Europe is retaliating when we're already losing money there.
Because they're trying to stick it to us, because we're sticking it to them.
Exactly.
Again, it's a spat, a tiff, a war, whatever you want to call it.
What do you think?
Well, I agree that I think that companies should be doing whatever they can to benefit their shareholders. And looking around the globe, it used to be that we'd be shrinking the borders in order to have operations from around the globe in order to benefit the shareholders and also benefit those who buy the Harleys.
Yeah. But calling Jeb Bush low energy or Ted Cruz lying Ted, you know what? That doesn't have economic implications. But when you start going after businesses like this, it does.
In some states that the president is very focused on in the midterms, I mean, not to make this political, but when consumers and companies in places like Missouri and Iowa, these farmers, when they start feeling the results of these tariffs in their wallets and in their take-home pay, I think that the president, well, it will be interesting to see if the president backs down.
So he's going to be speaking at a rally tonight in Fargo, North Dakota. Tomorrow, the president is headed to Harley-Davidson's home state of Wisconsin. So anything about this story is going to come out in the next 24 hours if the president wants to say at that rally or in Wisconsin. What do you expect? How do you expect this trade debate to end?
Well, I think most people are assuming that this trade tiff does not turn into a trade war. Okay. But I think as we continue to move forward with this tit for tat, that I think investors are beginning to say, you know what, we need to reduce some of our risk exposure. And so we, back in May, reduced our international exposure by 5 percentage points. And also I put out our mid-year outlook report just the other day, reminding investors that in the third quarter of midterm election years, average daily price volatility increases by 34%. So fasten your safety belts. It's going to be a bumpy quarter.